All right, class. One of the most difficult parts of this course is the comprehensive problem in Cengage. And so I wanted to just walk through this with you, especially the part one, and so that you get a little more experience and you get a little more practice looking at how to evaluate and then enter journal entries. So here's your Cengage homework, here's your comprehensive problem, and here's the chart of accounts for Kelly Consulting, and it's shown right here. One thing about the chart of accounts is that you don't have to get creative. As accountants, we're not paid to be creative. Um, so if a chart of account is given, then you'll want to stick to that chart of account and chart of accounts, and you want to record everything exactly as it's presented. And so you don't need to get creative and one time call this, like what's one, salaries payable and then wages payable and then, maybe you call it labor payable. It's always just salaries payable. So stick to the chart of accounts. I think Cengage does a good job of making you do that in this homework. So let's walk through a few of these transactions. So it says on May 3rd, we received cash from clients as advance payment for services to be provided, and we recorded it as unearned fees. All right, so we got an advance payment. Somebody says, we'll pay you to do some work for us. And one of the things that you'll always want to do is look at what is happening with cash. Cash is usually involved with each transaction. I say usually, not always. And we'll see a few transactions where cash is not involved. But if cash is involved, the easiest thing to do is look at what's happening with cash. So with cash, we're receiving cash, cash is increasing, so we're going to record cash, and that is going to be our debit for 4,500. And then we got unearned fees, and our debits always match our credits. And so we're going to record unearned fee or credit of unearned fees here. And then May 5th, we received cash. So what's happening with cash? We're going to receive cash. We're going to debit it to increase cash, $2,450. And then let's see, it's an accounts receivable. We received cash from clients on account. So let's record our accounts. I recorded accounts payable. It's going to be accounts receivable for $2,450. We paid cash, so what's happening with cash? We're going to credit cash, we're decreasing cash. So we know cash is going to be our credit. What else is happening? It looks like we have a miscellaneous expense for a newspaper advertisement. So we're going to record miscellaneous expense for $225 and cash, credit cash. I know crediting cash seems like it should increase it, but crediting cash decreases our cash balance. May 13th, let's see, we had an accounts payable for $640. We had some in debt that we incurred on April 5th, so we're going to record accounts payable. And what did we do? We paid cash, we decreased our cash again, credit. And see, I made that mistake. You credit cash to decrease it. And then May 15th, we recorded services provided on account for the period. Okay, so we provided some service on account. So we have accounts receivable. And this is one of those where we aren't going to have, there's not a cash transaction. We did some service and then somebody promised to pay us. And so we're going to record fees earned. Let's see if we got that right. Yep. And then this one's a little bit more tricky. We paid a part-time receptionist for 2 weeks' salary including the amount owed on April 30th. So if we scroll up, it's a little trickier. We had accounts payable on April 30th of $120. So we're going to go down here and we can say that we record, well, let's record the expense first. We're going to have a salaries expense, we're going to have salaries payable, and we're going to have cash. So salaries expense, this might be easier to start from the end. We're going to pay out $750 in cash because we're paying the receptionist, and we owed them that $120 from April 30th up above that I showed you. And so the difference is $630. So we notice that our debits equal our credit. Okay? Our debits equal our credit. We just had to break it up a little bit into salaries payable and salaries expense for the current period, expenses for the current period. Then we're going to record cash from cash clients for fees earned. All right. Let's see. So what's happening with cash? We're going to receive cash. That's always a good thing. So we record cash, debit, and then we had fees earned, and credit fees earned. That's an owner's equity account. So there we go. And then purchase supplies. Okay, so what's happening with cash? Purchase supplies on account. Ooh, that's that on account is key. So no cash changed hands, but we did increase our supplies, which is an asset. Ooh. So we increased our supplies, and it was on account. So our accounts payable, we gotta record our accounts payable. There we go. Recorded services provided on account. So probably nothing happening with cash here. So let's go down. We're gonna say accounts receivable. We provided a service, but we haven't been paid for it. That's an asset. So we record it as a debit. And then we have fees earned, an owner's equity account for 820. Okay, May 25th, recorded cash. Ooh, there we go, cash. So recorded cash from cash clients. All right, so we're going to debit cash to increase it for $7,900. Ooh, scrolled past that one. Well, let's see. And then we had, we're going to go ahead and record fees earned. There we go. Received cash from clients. There we go. Whenever there's cash, we can always look and see what's happening with cash. Here we received cash. So record that. And then our accounts receivable. Let's see. Sorry, I'm just looking back up through here. So this is maybe a good discussion to have. Is here we recorded services provided on account. All right, it's not the same dollar amount, but we recorded an accounts receivable asset and fees earned. All right, and then we need to record the cash. And again, this isn't the same dollar value. I wish they would have provided this transaction with the same dollar value. It might be easier to follow, but it's the same concept. We recorded accounts receivable for services provided up above here, and then we received cash from the clients on account for $9,000. Again, different dollar value, but you know, we had all these transactions up above where we were, you know, oh, is that the same? No, not the same dollar value. I wish they would have given us one with the same dollar value. Here, again, we recorded a accounts receivable and fees earned. And so then when you eventually receive cash from your customer, you record this type of transaction. You record cash, you received cash, and then you reduce your accounts receivable with the debt, with the credit. All right. And so again, sorry, there's not a clean same dollar value transaction that I can show you, but that's what's happening here. Again, one more time, I'll say it one more time. You record an accounts receivable when you do service for somebody on account, and you record a fees earned. And then when you collect the cash from those clients on account, you record cash as a debit and accounts receivable. You gotta reduce it. All right. So hopefully that helps, and that didn't just cause more confusion. But let's move on to May 28th. We have another salary expense transaction, and this one's pretty clean. We have salaries expense, and we're gonna pay cash, and so that's gonna be a credit. Reduce our cash. All right, May 31st. We have a telephone bill. We can record that as a miscellaneous expense, and it's gonna be $260. And what was it? We paid it out of cash. Paid our electric bill. Again, miscellaneous expense. And we paid it with cash. Then, let's see, recorded cash from cash clients for fees earned. All right, so let's record our cash for $3,300, and we gotta reduce the fees earned. All right. Okay. Recorded service provided on account for the remainder of May. All right, so we've got accounts receivable 2650 and fees earned. So we recorded the fees. Trying to look. Fees earned. So we provided that service and recorded the accounts receivable, and then we paid dividends, and we're going to pay dividends out of cash. So we say dividends. So one of the kind of informal, well, it's a formal rule in accounting that you always record your debit first. And so if you notice that I'm doing that, if you do it differently, the software is going to say that it's wrong, even though your transactions are technically correct. If you enter your credit first and then your debit, it's going to mark it as wrong. Okay, let's see how we did. I think we got all green check marks. And so hopefully that helps you with the comprehensive problem. I noticed that a lot of you had, not a lot of you, but some of you had issues with the comprehensive problem. So just wanted to show you that. One thing is right here, the email instructor button. You can always punch that when you get stuck in the Cengage homework, and it sends me, it's very helpful to me. You know, we can send multiple emails back and forth saying, hey, I need help with homework. And then I'm like, okay, where are you stuck? You email me back, problem such and such, question such and such. I have to fumble around. This email the instructor button sends me a link to exactly where you are when you ask the question. And so it's very helpful for me. But hopefully that's a good video and it helps you with your comprehensive problem.